NextGen innovation for NextGen marketing. We have a very eminent panel. It is my pleasure to introduce each of the members of the panel. Dhananjaya Arvind Tambe, Deputy Managing Director and Chief Information Officer, State Bank of India. Ramanathan Timachipuram Nagaratnam, Senior Director, Intelligence. Pankaj Gadgil, Head Self-Employed Segment, ICICI Bank. Priyam Alok, Chief of Business Banking, AU Small Finance Bank. And this session will be moderated by Sharat Chandra, Blockchain and Emerging Tech Evangelist. Sharat, over to you.
Thanks, Arvind, for the introduction, and a warm welcome to all the fellow panelists and all the participants who have joined in. I think today's session is quite relevant to the current situation. They say a crisis is often the breeding ground for innovation. So, this current pandemic, what it has done is it has catalyzed a global movement away from the cash. So, post-COVID, fintech and digitization have emerged as two emerging themes, and even the government is now they're looking at 1 billion transactions per day, apart from 3 billion transactions per month. And with the recent RBI announcement of Payment Infrastructure Development Fund, I believe some step has already been taken in that direction. But we have to keep in mind one thing, and that is the internet penetration will be 64% by 2023. So we still have a significant amount of population which is relying on feature phones. So how do we incentivize, or how do we bring them to make payments? So now there's certain innovation in that space. NPCI, they did a hackathon with Bill and Melinda Gates Foundation, where few startups came up with innovative solutions where you can do maybe missed call payment solutions, and also SMS-based payment solutions as well, USSD. Now, the question is, how much of these solutions, how much of these feature phone-based solutions are scalable, and how do they fit in with the current enterprise payment architecture? And I will put this question to Dhananjaya and seek his views on how will these solutions, the feature phone-based payment solutions, will be offering a seamless omni-channel experience. Because if you don't drive the consumer behavior, the goal of reaching 1 billion transactions per day will be futile. So Dhananjaya, over to you, and please share your thoughts.
Yeah, thank you, Sharat. In fact, just for the benefit of the viewers, we all saw those visuals on the TV of migrants going home using all sorts of modes. But did you ever wonder as to how did those migrants withdraw the cash that was there in their accounts? Now, in India, we have got a wonderful system called Aadhaar-enabled payment system. Very few people are aware of it. But it is one of those systems where you can walk into a customer service point, that is a BC agent, give your Aadhaar number and give your biometric and withdraw the money. So Aadhaar-enabled payment system, the transactions on this shot up by 4 times in just 1 week. The first week of April 2020, the transaction shot up by 4 times. So which means that when there is a need, as you very correctly pointed out, when there is a need, people will shift to digital payments. In fact, there is a similar system also. Again, very few people are aware of it. That's called the Aadhaar merchant payment system, where a merchant can take payment using Aadhaar number and biometric. And the transactions there also shot up by more than 5 times. So which means that people could or would want to adopt to digital payments, provided there is a strong motivation. Now, to the point that you made about what do we do for feature phones. So for feature phones, of course, USSD had been tried. It's already in production. But the adoption of USSD has been very, very poor, because using USSD is very, very difficult. It's not a user-friendly way of making payments. So therefore, could there be alternatives? One, you already said missed call banking. The second one could be SMS banking. In my opinion, SMS banking is something that the country should experiment with for small value payments. Let us say we can keep a transaction limit of 500 rupees per transaction. Maybe a whole day limit of 2,000 rupees, a whole month limit of 5,000 rupees. So those kind of mitigants we can have, but we should move to SMS banking. And I think that when we do that, then that is something, which will cover the whole of the population. Because right now what happens is only those people who have access to smartphone, internet on the smartphone, and they are capable of using a digital app, only those people are getting covered in the digital payment space.
Right. I think you made a very pertinent point, and small payments with respect to SMS-based payments, and if you drive consumer behavior around that, that will help us reach that target. Now, if you look at globally, there has been shift towards payment modernization. So even SWIFT GPI, there has been push from all the payment network service providers to make that switch to ISO 20022 standards. But still in the FSI space, there are certain people, certain players who are still relying on mainframes and legacy applications. So I would like to bring this question to Ramanathan and see his views, what he thinks are certain areas or pockets of innovation which can help or drive innovation in enterprise payment architecture. So Ramanathan, over to you.
Yeah, hi. Thank you. Thanks, Sharat. Typically, there have been requirements in terms of the digitalization from the the enterprise structure perspective. We have been looking at what sort of innovations can take place in terms of scaling to these digitalization requirements. Like for example, the SAP came up with something called a digital payments add-on, typically where they have helped us in terms of build up payment hubs, typically working in terms of interface between the customers and from the other side in terms of the consumer applications, talking to the payment service providers. So typically these payment hubs have facilitated in terms of seamlessly integrating, and not only that, looking at in terms of scaling up at a short term in terms of bringing up cloud-based solutions, out of the box solutions to quickly roll out such solutions where the payment service providers integrations are out of the box, and then help the large scale enterprises quickly catch up with the digitalization. So these are some sort of innovations which have come up. Like for example, in SAP they have brought this digital payments add-on. Similarly, there have been other applications which have been facilitated through the integrations criteria of the PSPs across. So that's the quick scaling up in terms of A, scalability, B in terms of the faster rollouts of these solutions, and at the same time complying with the PCI data security standards as well, so that the payments are secure, with the right people like PCI and all that, and then at the same time, the masking and then putting it to the enterprise structures and the enterprise applications or the consumer applications, or be it into the customers, so that ultimately the customers are safe and secure. Yeah, that's something which I would like to share.
Thanks, Ramanathan. Now, what are some of the emerging payment trends do we see in the current situation? So we have seen in the APAC region, mostly where people are paying through face. But now that has that will open up another can of worms regarding data security or personal data as well. So now coming to Pankaj, what do you think? What are some of the emerging trends in the developing or developed economies which can be brought to India, which are feasible, doable in India?
So thanks, Sharat. I think this question is very interesting. So first of all, I think there are 4 things which I personally feel are shaping up the payment trends of India. I think the first and foremost critical point which is there is, you already touched upon it in the beginning, which is the proliferation of the internet population, the smartphone population. Today 50 crore people actually have smartphones. We are at about 37% of the overall population penetration as far as smartphones are concerned. And if I compare this globally, I think South Korea is at 95%, but the global number is about 45%, is what I get to know of. If you look at the way internet penetration has moved up, moving up very, very significantly, and if I add both mobile and also from desktop, I think that number is about 56 crores. So first and foremost, I think what is clearly evolving, and we spoke about the feature phone experiments of NPCI also. I think the first I think the second important thing, which is very critical, is the way the government reforms and all the government bodies, how have they worked in creating this entire backbone or railroad for this digital payments to come in. And I think if I have to note, of some of them, because we often, tied towards or tend towards developed countries to borrow, on what we should be doing. But I thought that, we should cover what has actually happened and what's changing the face, of India's enterprise payments. I think 3 or 4 large things which I can relate to. I think the entire UPI revolution. You mentioned about the 1 billion payment per day. I think UPI I think of February, which was a complete month, about 120 crore kind of payments which happened on UPI itself. I think the coming of UPI, the Aadhaar e-sign, which is allowing the contactless, physicalless, kind of build up, or the entire identity layer, which is coming in through the video KYC, which recently has got launched for individuals. It's also got very shortly possibly it is going to come in also for entities, and also the entire DigiLocker, the entire process which we are saying, and if you connect with the India Stack, which 2.5 years back, I think that is creating the entire backbone for the digital payments for enterprises. Third important trend that I see is in terms of how consumers today are expressing themselves as far as digital payments are concerned. And just to give you some data points, I was tracking the per capita non-cash type of transactions which average Indian is doing today, and that has grown, Sharat, by a huge multiple of 10x in the last 4 years. So about 22 transactions per capita is what a typical Indian is doing, and clearly it's poised to grow by another 10x in the next 3 or 4 years. So I think the entire proposition of the one-touch payment that most apps today are providing, or the entire ease and convenience which I think all the entire digital payment architecture is providing, I think is becoming a big enabler. The fourth important thing, which is the most important, I think, trend, which I think relates to your question more specifically, I think, is the participation and the partnership that I am seeing of banks and non-banking financial institutions, in this phase, which actually is bringing trust and innovation, together to consumers. So I think that is also changing the way people are looking at digitization. If I look at developed countries and I look at pertaining to what enterprise payments, what is the typical correlation and what we can borrow, I am seeing a lot of opportunities which are coming up in open banking, and you see it in the developed countries, more in the UK and also in the parts of Europe where we are seeing open banking emerging. And I see some use cases of that emerging in India clearly. And we have also experimented as a bank. We've created solutions where typical challenges of reconciliation, which businesses have today. I think we've connected the reconciliation architecture, the accounting platform with the banking platform, which actually makes entity perpetually reconciled. So I think that's one thing that certainly can be borrowed, and I see that trend is clearly going to come in. The second important trend that I see is in the cross-border space, because entities today are doing a lot of cross-border, and I see the trend of platformization in a very big way on the cross-border sides. And there I think the logistics player, the player who's doing freight forwarding, the exporter importer, the customs authorities, and the bank, I think if all of them can come on one single platform, the entire cross-border can become very seamless. So all in all, I think these two trends are one of the two things that I thought will certainly come into India in times to come.
Thanks, Pankaj. And I think the account aggregator part, which is more like a model taken from the open banking, if I have the liberty to say so, right?
Sure.
So that will open up another say channel where banks can, or NBFCs or fintech players can offer credit to merchants or people interacting on their platforms, depending upon their data. So Sahai was supposed to go live in May. It didn't take off for whatever reasons. So how do you see that playing out? And will banks see that, or people in the BFSI space see that as one of the channels for revenue? And with this, I'll come back to Priyam and ask, how do you see cost of transactions playing a critical role with respect to all ecosystem players? Because MDR has been reduced to zero for certain category of transactions. So how banks will recover the cost of infrastructure or cost of connectivity? And Priyam, your thoughts on that?
Yeah. Hi. So first, I'll touch upon what's happening in the global scenario. Globally there are different countries. Each country has got a different journey of payments and different behavior in this space. So for example, if you see the US economy, it's a card-based economy, and every 3 out of 4 transactions happen through a card, be it a debit card or a credit card. MDR, or the merchant discount rate as we call it, is one of the highest across the world in the US, and it can range anywhere between 3% to 5%, depending on what relationship, what bank, and what interchange rates are there. The interchange rates of Visa and Mastercard are also pretty high, and US is but an open economy, so in that case they do not regulate the prices, and therefore it is so high, from 3 to 5%. Now, if I look at Europe, Europe has got a very typical thing that around 70 to 75% of the transfers, which are happening from the bank account to bank account, or debit card is being used. So there, the MDR rates vary between 0.2 to 0.3% in whole of Europe. Same if I talk about China. China has got a different flavor to it. Alipay and WeChat dominate around 80 to 85% of the overall market. And there also the MDR is around 1%, it hovers around 1%, or sometimes it's less than 1%. So each country has its own evolution in the payment space. India has its separate evolution. In the last 10 years, there has been a huge change in the way we look at things. If I talk about the changes in MDR fees and ATM transaction cost, it has come down drastically in the last 10 years in India. And now this announcement came in December that the MDR for UPI and RuPay would be 0, which also means that interchange would be 0. So that's a big change. I think the idea is they're trying to increase the digital payments in a big way, and obviously there are some fallouts of that. What's important to see is that how do we look at it? Traditionally, we have been looking at this as a cost center. Any bank, from a bank standpoint, we have been looking at it as a cost center. We look at it as a cost. But what if you look at it as an expense for data acquisition? You are essentially acquiring data, and you can play with that data. You can do multiple things with that data. You can lend using that data. So essentially, you're paying for data mining, and that's how banks will have to look at it. Obviously, it's impacted everybody in that ecosystem, but that is the way to go as of now. I think government tweaked multiple times on the MDR rates and finally came up with this. So we have to look beyond seeing it as standalone cost center. Maybe using this data, you can give a kirana guy a working capital loan. You can use this data for bill discounting. You can use this data for fintech based lending. So essentially, this is how the journey would be going from here. A lot of micro wealth products can also be sold using this data, like health insurance, etc. Talking about cost, I'll also touch upon the cost of a payment bank, because we're talking about payments, and that this also falls in the payment ecosystem. This bank was devised to help the payments ecosystem, but somewhere I think we have some intervention is required, because 4 payment banks opted out because of the cost involved, be it Aditya Birla or be it Chola, or Sun Pharma Group. They all stepped out, saying that it's not possible for them to run because micro lending was not allowed. Any sort of lending was not allowed for a payment bank, and that hampered the revenues. And then they had a negative carry, both in terms of CRR and SLR. So I think somewhere maybe even RBI should consider allowing payment banks to lend, at least for the micro lending bit. They are any which ways touching those merchants, those customers, from the payments bit. And if they start, while one can always define a cap of lending, but I think that also can be looked at to make it more viable. The idea is that everybody in the ecosystem should be having a viable business model. Otherwise, no such drastic measures would be of any help.
Sharat, Sharat, I think the question that you had also asked was about Sahai, and 30 seconds we can just want to add. So I think this entire journey, which is there, of moving away from perennial open-ended limits versus doing a lending which is purpose-based, I think is also one very, very important trend that I can see in the marketplace. I think some efforts were made with the TREDS architecture, by the regulator and also the government. I think it just has had to take off. But I think Sahay or the entire beam for lending, which you were speaking on earlier, I think basically the entire intention is to have purpose-based lending, and a very, very simple use case could be a utility bill, for example, for an entity that he needs to make payment for, and he puts it up on the platform, and it's a open architecture, and the usage of money is very, very clear. Then I think the risk to that extent keeps going down. So I think that is one problem which possibly will get solved, and it will get solved for smaller tickets is what I personally feel. And I think a lot of learnings from similar platforms in Mexico. There is a platform called Nafin in Mexico. I think a lot of learnings have also been captured here, and we as a bank are also working very closely with the folks of iSpirit to make that work.
Yeah, thanks, Pankaj, for your input. And I think MSME lending can be, I would say, revolutionized by using flow-based lending methods, and again using payment data as well. Now, at this point in time, I'll pick one question from the audience, and I'll put this to Ramanathan. So the question is, enterprise payments is huge in Western markets. In India, it's fast making way in corporate culture. So how do you see enterprise payments as the next frontier for payments innovation? Ramanathan.
Yeah. Yes. Thanks, Sharat. See, typically, when it comes to the enterprises, they work on different industries, right? So they have typical challenges in terms of different payment methods. So what typically they need to look at is in terms of A, the scalability, and B, in terms of the infrastructure built and the integration criteria. And 3, the success with which they are able to reach to these PSPs we have. Ultimately, building the safety standards and the integration criteria. So these 3 criteria, as I see across different payment methods, I would look at to be looked at, and of course, the speed with which these are being built and being rolled out, and made a success is something which is the critical part of the whole story, I think. So that's the key driver for success, as I see it.
Yeah. Thanks, Ramanathan. Now, at this point in time, I will try to bring security part of it, because you can't divorce digital payments and frauds. They're kind of interlinked, so and they will go hand in hand together for good amount of time. So, and as authentication methods have moved from, let's say, 2-factor authentication or multi-factor authentication to behavioral biometrics type of authentication, which PSD2 prescribes, right? So how do you see that being adopted in India, or are we still years or months away from happening? And I would like to put this to Dhananjaya and seek his views, or what he thinks about behavioral biometrics authentication as one of the secure ways of identifying or keeping frauds at bay.
So Sharat, if your question was of identifying, I wouldn't say that that could be a method of identifying as far as payments is concerned, unless you are going to use the Aadhaar-enabled payment system. So Aadhaar-enabled payment system, as I mentioned earlier, is a purely biometric-based payment system. And the likelihood of fraud in AEPS is absolutely nil. Right. So, but as far as the rest of it is concerned, right now we do not have any biometric-based authentication mechanism. So we don't have a system, where we can authenticate you using your let's say fingerprint or using your face as a method of recognition. See, there are certain challenges. One is that although certain phones are permitting login using fingerprint, but then the problem with these methods is that the fingerprint resides on the device, that is the phone itself, right? And generally no security department will permit authentication of a transaction with fingerprints which are not in the bank's environment, right? So this is a challenge as far as use of fingerprints is concerned. The second is regarding whether facial recognition could be used. Some experiments we have done using facial recognition, not very successful because there were significant challenges as far as liveness detection is concerned. Now that RBI has permitted video KYC, so again this activity has been spurred, and we will also be moving to video KYC shortly. And maybe, as that space grows, then this technology, the facial recognition technology, that will also grow, and perhaps that will become more reliable. Because see, in payment space, finally, the most important thing is that it should be an irrefutable transaction. So unless we reach that stage, we can conclusively prove that this method of authentication never fails. Perhaps we'll not be able to use that as the sole way of authentication. Perhaps we can use it for, let us say, subsidiary authentication, right? So maybe some third factor of authentication, or maybe a second factor of authentication for low value transactions. That is something, which perhaps as we go along, we may experiment with. But right now, I don't think that anything is immediately on the horizon as far as making payment using biometric authentication is concerned, other than, of course, the Aadhaar-enabled payment system.
Right. So I think we're still, our facial recognition will also open up another can of worms with respect to personal data protection aspect as well. So that will, again, itself will take its own sweet time. But if we were to talk about friction in the B2B payments or B2C space, how do you see DLT or blockchain being applied for cross-border payments? I will put this to Pankaj and seek his views.
Yeah, so I kind of covered this, Sharat, earlier, but I'll just elaborate. So I was going through a very interesting case study, which I felt that's very relevant to the Indian context. And there was a small startup in Singapore called Camel One. Well, everybody knows about what Alibaba has created in China on the space of B2B and cross-border. I think that actually beautifully dovetailed what we should possibly have. So there, what I saw is that all the relevant players in the ecosystem of cross-border. So typically in cross-border, you have a logistics player, you have a freight forwarder, you typically need to have some marketplace which connects the exporter and the importer, right? Then you need to have some kind of a trade assurance which is provided, somebody to also do inspection, the customs authority, and you also need the bank. I think these are the various 7-8 players. The way it happens in India is, although a lot of efforts have been taken in the recent years to create EDPMS and IDPMS, which is a portal which is built by Customs and RBI, which allows today customers to even regularize their bills on this platform because digitally you are able to connect. It's an open architecture. I think what Camel One has done in Singapore, I think has brought all these players on a single blockchain. It's all of them are on blockchain, and the entire transaction and the entire friction and anxiety, which is a very large emotion when you talk about cross-border, I think that is taken away with everybody connected on one single platform. And today, if I have to talk about any exporter or importer in India, for example, I used to believe 2 years back, having been in this business for long, that trade transactions are complex transactions, they should happen in the branch. That was a thing which was there, a preconceived notion. But I think with products coming up, with again the regulator making a lot of changes, like regulator today has allowed earlier cutoffs were at 330 only. Mobile transactions for outward remittances were not allowed. I think all those things have actually opened up EDPMS, IDPMS that I spoke of. And I am seeing a huge proliferation of consumers, where consumers are actually booking the rates online, doing the trade transaction online. If you dovetail this and get everybody on blockchain, then the costs will certainly kind of go down, and you can actually have a proposition where you can just ask your exporters and importers to come on this platform, and the rest is all taken care of. So I think that is where one has to reach. It's a long journey, because blockchain finally is all also about everybody coming together, accepting it as a platform, and then completely co-opting to kind of it. So I think that is in times to come going to change the way, because India is today possibly 3.5%, as far as the global trade, if I look at global trade for services, and possibly in capital accounts, maybe 9%, ninth ranked possibly in the world. But I think this is going to change the way, things are, and possibly, things are going to become easier, and more enterprises will be then motivated to do cross-border.
Right. And I think it's more of an ecosystem play where everyone has to come on board to make it happen.
Sure.
Now, if you look at the consumer behavior, now social commerce is picking up in a big way. Now, there have been significant investments by some of the social giants in the Indian space as well. And if I can quote one of the recent news, Visa partnered with WhatsApp and MasterCard, and WhatsApp Pay is being rolled out at a nationwide level in Brazil, right? So how do you see that playing out in India? And I'll put this to Priyam and seek Ramanathan's views as well later on. How do you see this playing out in India? And what are some of the challenges with respect to integration, or are we smooth enough to go ahead? Priyam, your thoughts, and then Ramanathan, you can come in.
Sorry,
Ramanathan?
I didn't get your question. Sharat, can you just repeat it for me?
Yeah. What I'm saying is, we could see there's a lot of shift towards social commerce, right? And some of the social giants, they have invested a good amount of money in the recent past in the telecom players in India and the fintech players in India, right? So how do you see this playing out? And since given the fact that WhatsApp has been rolled out at a nationwide level in Brazil, how do you see this playing out in India, and how far are we from that stage, and how our payment structures or enterprise payment architectures are aligned in that direction? And I will put this to both Ramanathan and you as well. I will seek your views in terms of adoption in the Indian space, the social commerce, and will this open up another channel of revenue generation for banks and fintech players?
Yeah, so I think this definitely is an area which would be growing. Having said that, again, we have to come back to the divide of India and Bharat. And social commerce is here to stay, is here to grow for sure. But we were talking earlier that the internet penetration is still very low. 3/4 of the population still doesn't have internet. And for social commerce to grow, all these basic infrastructure has to grow. It is bound to grow. If you ask me, the trend would be in leaps and bounds. It would be growing in a very big way, and it would be catching up. The government and the RBI, is also talking about, encouraging this. So I think the ecosystem would be supporting this. If I talk about, various other companies also coming into, global companies coming into something like this, something to do with technology, innovation. In your case, you talk about social commerce. There are various other companies also which have tied up non-traditional players which have come in the space. For example, this global shipping company Maersk, they announced one partnership with IBM for a blockchain-based supply chain solution. Similarly, Goldman Sachs, otherwise an investment bank, they announced their plans to expand their product offering to include cash management. Alibaba and Amazon, they have also, they have established B2B platforms, and they now are, they're into financing services also for their vast client base. So there's a company called ClearBank, which provides agency banking services to other banks in payment clearing space. So if I talk about the ecosystem and technology innovation, it is bound to grow from here. How fast is for us to see? It all depends on how fast but going by the trend of the last 4 years, we can safely assume that whatever you're mentioning, the social commerce would be taking up fast. Obviously, it'll start with India and slowly percolate to Bharat. What is important is that we need to improve the payment infrastructure across the country, and not just harp upon the metro and urban areas. If we go rural and do this, I think we are in for something really big.
Thanks, Priyam. Now, Ramanathan, how do you see the enterprise payment architecture space playing out, since we need significant investments in the payment infrastructure space as well? So how do you see that playing out?
Yeah. Okay. So when it comes to the infrastructure, as you rightly say, in India, whenever it moves in with a larger volume and play, right? So typically the infrastructure has to be, if I look at it, a good scalable, sustainable model, with, of course, established data security, standards prevailing within the, the regulatory framework, right? So that's essentially is something, which is critical and essential, which holds the key, as I see. So in the recent past, we have seen demonetization, now COVID situation. Before, we have also seen how India has marched from nowhere, technology to say 3G, 2G, 4G technologies, right? So we have just leaped. So typically, how we have sustained is all with those scalable, infrastructure, which we have, of course, struggled to put up, but we have succeeded to do that. So that's the as I see it. Yeah.
Sharat, can I add 2 bits on the earlier question, if you're okay? Sure. So 2 bits on your earlier question, I think, to add to what Priyam was kind of mentioning. See, I feel this ecosystem of I would call it more of the disorganized becoming organized, and I think the opportunities there look to be very immense. Considering the value of unorganized retail which happens in India, and therefore all the investments that you spoke of are coming into India. The number is 75 lakh crore for the year. Only 20 lakh crore is digitized. So I feel there that cash has been a prevalent part of the economy. About 11% of our GDP is cash in circulation, which is typically higher than most of the countries. I see with social commerce coming in, with the investments that the banks are also making, I think we will all have to pivot from from the issuance side of the digital payments. I think a lot of work has been done. Dhananjaya also spoke about APS. There are multiple things: UPI, BPS, all the cards networks. I think a lot of good work has happened on the issuance side, while great work has also happened on the acquiring side. You will see a lot of emphasis by social commerce companies, by banks, by other financial institutions in really ramping up the infrastructure for the merchants in collecting payments. Today, only 45 lakh merchants actually are there, 45 lakh POS machines. But that number, I think, Sharat, will significantly scale up with all this coming together. That's what I thought. 2 bits on your earlier question.
Yeah, thanks, Pankaj. And we are coming to close of the session. We have 5 minutes now. So I'll quickly touch upon reconciliation and try and bring in Dhananjaya's views on this. How do you see this playing out, and how is it prohibiting for creating an omni-channel experience both for merchants as well as customers?
Yeah, so Sharat, it is very, very critical, because ultimately people will have faith on any payment system only if it is reliable. And even if I get one bad experience out of 100, my faith in that payment system is going to go down. Now, typically, how do the reconciliation issues arise? If all the systems were connected perfectly with each other, then in theory, a reconciliations issue should not arise. But what happens? Let's take an example. Suppose there is a UPI transaction which has been originated from SBI, and let us say it is going to Bank of Baroda. It reaches Bank of Baroda. But before Bank of Baroda can send a response, the connectivity gets disrupted. Now, what is the situation? The payer's account in Bank of Baroda has been debited, but the receiver's account in State Bank of India has not been credited. Now, in a situation like this, the faith on this system will go down, and this will happen. I mean, finally, of course, the receiver will get the money, or the payer will get his money reversed. But this will happen only on T+1 basis when the reconciliation happens. And till that time, there is a huge amount of anxiety that builds in the mind of the payer. He feels my money is gone, the other fellow has not received, and therefore, the faith on this system, it goes down. Therefore, it is absolutely essential that we have a very robust reconciliation system where we can reconcile, if not on real time, at least near real time. And I believe that a lot of innovation in this regard is happening. NPCI is moving towards a blockchain-based reconciliation mechanism. Vajra. Yeah. So the Vajra is the project, which they have started for blockchain-based reconciliation. And I hope that within the next 1 year, when this project comes to fruition, this very big problem will get resolved. And once it gets resolved, then you will find that there is a considerable pickup in the payment space. Say, for instance, UPI. Just think what all benefits UPI gives. as a merchant, you can receive a payment from UPI without having any device. All that you need is a QR code. So just have a QR code and receive the payment. So the whole cost of creating an acquisition infrastructure, an acquirer infrastructure, that whole cost gets saved. And that for a country like India would be very, very important, because it is not possible for us to create a POS kind of an acquiring infrastructure across the country, especially when it comes to small merchants. But a QR based system where there is no cost on the acquirer side, that is something which is possible. But as I said, as you very correctly pointed out, that unless the reconciliation piece is taken care of and the system is made foolproof, people will perhaps not develop the level of confidence that they should develop in order to make this system succeed.
Yeah, thanks, Dhananjaya. I think blockchain will bring the single source of truth, and hope NPCI comes with that blockchain-based solution for real-time settlement. And with this, I would like to thank all the panelists, Priyam, Pankaj, and Ramanathan, for sharing thoughts on the evolving payments landscape. And I hope the audience would have enjoyed the session as well. Thank you, everyone, for joining the session, for listening to us, and I hope everyone would have taken deep insights from today's session. Thank you.
Thank you, Sharat.
Thank you, gentlemen. Thank you, Sharat, for sharing your insights on enterprise payments, next-gen innovation for next-gen banking. There were some very interesting insights that were tabled. Thank you so much for your time. I'm sure the audience is leaving with a lot of takeaways. Thank you.